Welcome to the Challengers Podcast, episode 13. I'm your co-host, Zack Miller. I'm editor-in-chief at Tearsheet, and with me is Josh Liggett. Josh, can you introduce yourself?
What's up, Zach? Josh, associate at Our Crowd. How you doing today?
Thankfully, I don't have Corona, and I think that probably is an easy segue into one of the first topics we will handle here. And we're doing this with the utmost reverence and honor over the process that's going on right now. But wow, this is like, it's really hard to talk about banking and everything like that without talking about Corona right now, right?
Yeah, I mean, listen, like first and foremost, everybody, all listeners, everyone out there, please stay safe. Take care of your families, take care of everybody. It's something, we've been thinking we've been home for I think 3 weeks now. So it's been a little crazy. Little cabin fever, little Jack in what was that movie?
In the coffee?
The no work and no play makes Jack a dull boy. A little bit of the Shining is going on. I saw a guy in India ripped off his clothes and ran into the street and bit somebody to death. So we're not there yet, but getting a little punchy in the cabin fever. But thankfully, in all seriousness, everyone's healthy. And while there is a lot bigger things in the world going on right now, there is also fintech trends that are happening.
Yeah, and I actually think this is a transformative time for finance as an industry. Tearsheet was doing a couple podcasts last week with some mid-size Midwestern banks. And, it was interesting, like as we got onto the call, like the CEOs, these were two CEOs, they sort of said, "I'm sorry, I'm 2 minutes late. Like, we just had an outbreak in one of our branches. We got to shut it down and scrub it and send everybody home." And it just dawned on me, like, this is changing. The idea of thinking of branchless banking is no longer just an idea. Like, it could be a reality.
Yeah, I mean, a lot of crazy stuff is happening. I mean, like this is sort of like a 9/11 event, as weird as that sounds, and not to sort of belittle that or compare anything, because nothing's comparable, but this is sort of like that black swan event that nobody saw coming, that is going to change the world forever. I mean, God knows what we're going to see overall, if we're talking about, I'm not somebody who understands medicine that much, other than, whatever, my wife or my herbalist tells me to do, all that. I grew up in LA, so, come on, give me a break on that. But are we going to start getting, yeah, exactly. Yeah. Cupping and all that fun stuff. Are we going to get like not being able to get on the airplane with a cough? Is it going to be like what? This is like a new reality, just like before 9/11, traveling was totally different. I think after this, everything's going to be different. And that obviously includes financial services. But Zach, I did tell you that I'm doing okay. But if you talk to me about a credit card color during this podcast, I swear to God, if we talk about credit card colors,
okay, we'll stay away from colors. We'll just focus on materials, metals.
Different coronavirus colored credit card. If we talk about some sort of credit card color thingy like that, I'm out.
Okay,
like that would be the last straw.
I respect and honor your boundaries, Josh. No, but so think about this: if you're a bank and you're sort of just you're just kind of dawdling getting into digital, or you haven't fully gone digital, or you're a lender, you do mortgage lending, and maybe that's where much of your revenue comes from, but you don't have an online application, like just a minimum thing. You're like dead in the water now. No?
Yeah, it's this is like a taser up the ass to like get that stuff done. Like it also like I live in Israel, right? And like no, all of a sudden nobody could deliver anything. Like God forbid a store would have delivery. Like if you live in New York, like everywhere freaking there's delivery of everything. There's websites, they deliver, no problem. No one delivers here. All of a sudden they say you can't have like eat in, and every single store does delivery. It's like, oh, like it was so hard. Why didn't you do it before? Because it wasn't the priority. And now we're going to see that same thing with every sort of institution, every bank, every sector that had people who were just lazy and just like said, oh, we're still going to have business. We don't need to invest in digital transformation. It's fine. No big deal. Now all of a sudden people are scrambling. And thankfully there are tools out there to help people, make that transition. That's the one thing that's good, is that it's not like we're in the dark ages where people have no idea what to do.
Right. And that's a good point. And one of the things we were speaking about in preparation for this episode was, what does this mean for challenger banks right now? Like, obviously, if a customer can't walk into a branch and can't get service from his local bank, challenger banks are obviously have been for a couple of years viable options. Are they going to shine during this time, or does this just get the incumbent banks like really really fully committed to going digital? In which case, they're just going to kill the challenger banks. So like, I actually don't know which way it's going to go. I think a rising tide probably floats most of the boats, at least in the short term. But this may promote to me the bigger guys really 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 embracing digital for like not just saying it but doing it.
Absolutely. I think that, and I think that's the key. Exactly what you said is, we've talked about, we've had a lot of challenger hypes. We've spoken about it at length. Is this going to be, when are they going to make the turn? Where are they going to make the turn? And now is when it's sort of time to get going, or time to get going, if you know what I mean. Like it's one or the other. And on the one hand, you have challenger banks that are freaking ready to go digital. They are digital. They don't have branches to close. They are ready to provide awesome services to people, fully digital, no problem, yesterday. You know what I mean? But are people going to be like, I don't want to put my money into something that is at a ridiculous high valuation, that is maybe, as we're hearing in the venture, and everyone I'm talking to in venture is like, valuations are going to come down. The market freaking lost 50%, 30%, whatever it is now. Everything's coming down. All the valuations are coming down. So these companies raised a lot of money, but like, what are their burn rates? Are they going to be able to retain their growth? Are they going to be able to service people? Is like, really, it's going to be amazing to see how it plays out. And if like the big banks come out with a really awesome digital solution, are they going to blow them out of the water, or are they going to go to the path of Fin, sort of, where it doesn't work and challengers then get to step up and take a nice solid market share? It also depends how long this goes on for. That's obviously a big factor.
Obviously, yeah.
This is over 2 weeks and there's nothing to talk about, which it
right.
probably isn't. But if this is going on for another 6 months, theoretically, or like we were talking about before, if this is seasonal, where this is something that happens every year, every 2 years, or whatever it is, it can have really big ramifications down the line.
So one of the things we saw this week was over the past 2 weeks are rumors being spread. I don't know how they started, or how truthful they are. It sounds like that they weren't necessarily based in fact, but that Revolut and I think Monzo were in dire financial straits and were going to go under. Now Revolut just raised Banco bucks, I don't think $500 million or so over the past month, but and they're probably not going under right now. But that fear of, and I think we're in panic mode. Will my challenger bank be around for the long term? Chase still feels safer to me. It is, obviously, but I also had this image of Jamie Dimon like sitting on WhatsApp actually spreading that rumor himself. But maybe that's just too big of a conspiracy.
I don't know if Jamie cares about Revolut, honestly. It's even on his radar. Yeah, that amount of money. I mean, it's tough because going back to the sort of what caused this whole thing, like, this isn't like 2008, right? Where like, it's not like there's a credit instrument that people took advantage of and were being idiots about and acted irresponsibly. Like, this is not a financial problem, but it's having a huge impact on finance.
Yeah,
it's gonna, of course. The big, like, what if credit markets? Like, what happens with credit markets? What happens? Yep. These are like big trends for macroeconomics and like bankers and people way above my pay grade talk about. But like, what if basically everybody defaults? Like, and then who get like that? That's sort of the issue where it gets into of like, well, it wasn't like the situation of, well, the banks are literally running out of money and they have these capital calls with each other and there's just no money left and it's all the money's evaporating. It's more of like, what about consumer credit? Is that going to affect everything? And I do agree with you that people would go for a safer route, in that instance. You buying Bitcoin now, which is that the safest, Zach?
So one company I probably would invest in if I could is OakNorth. It's a UK challenger bank. This last week posted yearly growth of 95%. I think that was in gross profits. But which was interesting, still a great number. One of the fastest, I think it is the fastest growing European company according to the FT. But growth is slowing down, like especially in its loan book. Where it grew 100%, year over year, 2017, 2018. Last year was 58%. They're now standing at £2 billion of loans and advances to customers. So, I mean, these challenger banks OakNorth in particular has shown that you can continue to grow. It's got a niche market. It's profitable. You could build a business here. Maybe OakNorth's the only example of that. But regardless, I think that idea of things slowing down is interesting, right? Like they're still posting profits and they're still, growing revenue, but like the second order magnitude, the second order growth thing is changing now. And I think like, well, obviously this is a big company and it's a biggish company in our field. So it's like, it's going to be hard to continue growing at the same numbers as the numbers get bigger. But, it is hard to build these companies. They require a lot of capital. And now we're headed into the great unknown. And so, I don't know. And I don't know, I like OakNorth, Josh, but,
You know, you like Oak
yeah.
North.
And so it is going to be interesting. Also, like a lot of these companies, the challenger banks have, and we've written about this on Tearsheet, have global expansion plans. Many of them had plans, at least before this crisis, of going and getting local licenses, acquiring those licenses, and opening up shop, which would require people on the ground. If travel is shut down, if this goes on for an extended period of time, we might see more partnerships happen along the way. So Revolut did launch in the US last week, and they did so with a partner, even though the intention was originally, and they had told us that they wanted to acquire a US license. That's not happening. It's certainly not happening anytime soon. Anyway, I just think that global expansion, like these idea of these challengers being global banks, maybe needs to be, recognized at this point or challenged.
I mean, first of all, with Oak North, like you said, like you can't have 100% year-over-year for growth at a certain point. It has to just stop because then the numbers just get too big and it's too crazy. But right now, everyone, like all the startups that I speak to, everybody's just in panic mode right now. No, like this has been going on for such a short amount of time. People are just freaking out and they don't know what is going to happen. Everything's basically getting pushed off a quarter at least. Like all the funding, all the closings of funding. Like if a company is sitting in a lot of cash, they're pushing everything off a quarter or 2 quarters. Just to see what happens. They're cutting burn drastically. The huge Israel, which is a big tech hub, huge unemployment numbers out of Israel because of basically because of startups. A lot of what cutting burn to make sure that they have enough runway to just get through and see other side of this and just because we have no idea what's going to happen. So I think all these plans, that people had of building these global banks and all these things, like you wake up one morning and great that that's possibly over, and
Jeez.
it's crazy. Like this is like it's something totally crazy. That we've never people talking about, oh, you should listen to your elders because we've been through this, and people from 89 and 2000 and 2008, and I do agree. I think listening to elders is very important and that history is awesome, but this is something that is totally unprecedented, like to try to put like the emergency brink on the economy, like
The global economy.
yeah, like who knows what the ramifications are going to be. And nobody knows. So
I can't. Yeah.
yeah, so I think that the important thing now is survival mode, and if you're sitting in a lot of cash, then the question is like I think to go and go for an expansion right now at this time and go through a hard burn, at this time as a startup or as a company, if you're not profitable, or for that matter, unlike Oak North, a lot of these companies that don't necessarily have a viable business model at this point, is very risky, very, very, very risky, and could, we could see some giants topple of the challenges of these new fintechs. I think also, going back to what we said before, I imagine there's going to be a tremendous consolidation in the market.
Yeah.
As companies start to fail, so you could see it, a JP Morgan pick up, a digital solution to help with their, provide online loans or whatever it is, or maybe you could see like someone pick up, like a big bank pick up a Blue Vine or a Fundbox or
Mm-hmm.
or a Cabbage. That could be really, really interesting. Going if there's consolidation. For God's sake, say that article about how Apple could buy Disney.
Yeah.
So it's going to be very interesting going forward, moving to the unknown, and business model, profitability, and survival, I think are the most important things at this time.
Well said, Josh. There were a couple more things I wanted to mention before we close this episode. One was that Square did get approved for a limited bank charter. That's going to be interesting. We know that they've been trying to do that for a couple of years. I don't necessarily see them as turning it to a pure consumer bank, but definitely interest in lending, cash advance to the merchants using Square. That's the model that's tried and true, and we've seen Shopify do that. PayPal does that. Amazon does that. So Square getting a license is interesting. Anything to add to that one, Josh?
Square, you and I both
we
love
like Square. Yeah,
we love Square.
Credit Sesame introduced a free digital bank account called Sesame Cash, and that's following in line with Credit Karma, which did it at the end of last year. These PFMs, whether it's based on credit or based on just managing money, moving money, like getting into banking, and they're doing it through partners as well. Makes a lot of sense for them, not just from a revenue standpoint, but also for the customers in terms of not just being able to track things, but actually transact through these platforms. I think is a very, very powerful connection between those two things. And the last thing I want to mention was a story about a challenger bank that's being launched, just raised $17 million. I think that was its first round. It's launching in private beta after closing a $17 million. I don't know if that's a seed round, but it's
nice time.
Great time to start a bank. But I have to say that Bill Harris started it. He was former CEO at PayPal and at Intuit. I think he might have been on this podcast like 300 episodes ago. He also was a founder of Personal Capital. And the reason I'm mentioning that, which was one of the first robo-advisors, it sounds like the idea is to kind of give a dashboard for where your money is all over. So the idea is like credit's the heart of the service. It helps customers integrate their finances into one account, making it seamless to save, spend, and borrow money. That's kind of what Personal Capital was first, with these dashboards, so that even if your money wasn't completely at Personal Capital, but it did give you the ability to look across accounts, across institutions, to be able to get kind of like a one view across all of your finances. So I think the bank is launching that same sort of ethos. Yeah, exactly. Like, timing couldn't have been worse, I guess. And it's also launching into a field that you've got Chime, Vero, MoneyLion, Chase, obviously, and and then the Credit Karmas and Credit Sesames of this world. So it'll be interesting to see if it can differentiate itself enough going after sort of middle America.
And they're going to be struggling. I think that obviously the small businesses are going to be struggling, and that's access to credit is going to be something that's really important. So it's going to be interesting to see how this shakes out, in that whole thing. But at the same, as much as we joke around about it, it's an awful time to start a startup, and launch. There's many examples of great companies being started during dips and crashes and all that stuff. So there's going to be, the cool thing is that we're definitely going to see some awesome innovation out of this. And as awful as it is, where a lot of people lose their jobs, it forces people to become creative. And then I imagine that a lot of those people will end up starting their own things and hopefully creating some really amazing services that 3, 5, 10 years from now become monster players. That's what I'm hopeful for. If the zombie apocalypse hasn't taken us all over by then, and we're all not living in bunkers with toilet paper as our currency.
As always, a very uplifting way to end this episode. Josh, always great to talk to you.
Always great. Stay safe, Zach, and everyone out there. Please stay safe and try to send memes, because as much as crazy as awful it is happening, we still have to be happy and try to keep our hopes up while this madness is going on.
And thanks for joining us, everybody. Be well. Stay safe.
See ya.